Good morning, Steve Freeman in Chicago with the grain comments. Well, markets are mixed with soybeans up 17 cents in the July, corn up 3 in July and December, while wheat's anywhere from 3 to 6 cents lower. Stocks look to be higher, dollars lower, crude's higher, precious metals are higher, and cocoa continues to trade higher. I think USDA dropped crop ratings 3 percentage points in both corn and beans overnight. The lowest rated crops are in Nebraska and Missouri. Low ratings are also across the southern Midwest, with high ratings in the northern Midwest. We also noted that spring wheat crop ratings declined 4 percentage points. The U.S. winter wheat harvest is 8% down versus 9 average, but rains are slowing the hard red winter wheat harvest. Globally, from a weather standpoint, Canada's dry, but it looks like Alberta will get some timely rains this week, and those rains will shift into Saskatchewan, improving conditions there. We'll have to watch and see if they move far enough east to help Manitoba. Rapeseed futures, Matif, wheat futures all higher. The Matif is testing an 8-month downtrend line. All of this is because dry, especially northern European weather. In Russia, you've got spring wheat areas dry, Ukraine is dry, Kazakhstan is dry. Individually in the beans, I think we saw yesterday slow bean export numbers weighing on the July. Now we're looking at soybean oil up and seeing a test of 55 cents a pound. There's talk about increased demand, and that could help soybean oil, which could help soybean futures. We also note that in the corn, cash basis levels are very strong, and that continues to support the corn market, although if we see a change in the weather pattern next week, ridge developing early next week and then breaking down the following week, and weather turns a little bit more normal after that, D's corn seems to have some pretty important resistance at the 550 area. In the wheat, slow exports out of the U.S. I know it's early, but 50% of our season-to-date exports compared to a year ago. Russia's talking about lowering their floor to $230 a ton. And that continues to weigh on the marketplace. So even though Matif futures is showing some bottoming, it's the Russian prices that needs to bottom before we can actually see a bounce in our wheat futures. Today's CPI data, pretty important as far as the outside market trade, and it seems like over the last few days there just hasn't been very little selling in the U.S. stock market above the market, which allows it to rally. So choppy trade, beans supported by domestic basis and soybean oil, corn trying to bounce on lower crop ratings, and the wheat market continues to find resistance due to lower Russian prices.